A lot of traders that I work with are stuck in an unprofitable trading loop cycle. What happens is you put on a trade and then sometimes it works. And then you put on another trade and then it doesn't work. And what happens is you keep running into this cycle of profitable, unprofitable, profitable, unprofitable. And it keeps going, shifting back and forth from profitability to failure. And you never have any consistency or growth within your trading account. The equity curve just stays flat or sometimes goes down, but it's nothing consistent. There's nothing to really, have a solid foundation behind it. And why is it that we're stuck in this unprofitable cycle? Why is it that we keep repeating these things over and over again and never getting out of this unprofitability territory or can't get the consistency? Why can't we get there? I'll give you the answer in this video, and it really comes down to looking at things that you are too focused on strategy and not the process. That's what I see with a lot of people. Many traders out there, what they do is they focus so much on, hey, let me work on the strategy. Let me work on the strategy. Okay, I don't like this strategy. I like a different strategy. So this is kind of what they normally do. So here's some of the kind of classes we've done in the past. And what we do here is we draw on the screen. So here, what happens is that we go in and we start out with, hey, trading covered calls. And a lot of times they work for a little while and then you have some unprofitable things that happen. So then what we do is we eliminate covered calls and then we go and hop into a different trade. This could be vertical trades. It could be something else. Then we do those for a few cycles. Okay. And then there's some trades that don't work. Okay. You've got some losing trades. And then you go in and you hop to maybe iron condors and you say, yeah, well, let's do something else. Let's do some, non-directional trading. And then again, the cycle repeats itself. So you can see what really happens. And that's the fact is that we're not really focused in on process here. We're focused on strategy. Now, what a process does is that we go in and we look at what's been going on and what's happening within that strategy. So you can take your pick on any strategy you want. It could be verticals, it could be iron condors, it could be covered calls, something very simple. So let's just say we've got covered calls. Well, what we're going to do is we're going to go in and we'll do version 1. Okay, then we'll go in and we'll do version 2. Okay, and then we'll go in and do version 3. So we might have multiple versions of trading covered calls. So the first version that we do is the first 10 to 20 batches of trades that go on, and we go in and take a chance on them. And then we manage them how we think and believe that strategy should work. Then what we'll do is we'll get some data and information from this, and we'll go and now do version 2. So after getting some analysis and, a little bit of profitability or losses, we now see, okay, this isn't working. That one was working. What can we do things and what things can we change to do version 2? And then again, we might do 10 to 20 more trades with these new variations or improvements, which is what we want, because what we need to do is we need to make improvements to them. Because when you have improvements, what an improvement cycle will allow you to do is it'll get you unstuck. It'll get you from doing the same thing over and over again to moving forward and going to profitability. Once you've got some improvements, now you go to version 3. And by version 3 over here, that's where things might take off a little bit faster. But that's what you want to do, is you want to focus on, okay, well, step 1, step 2, and step 3. And it takes 10 to 20 trades, maybe 30, maybe 50 trades to really get a little bit of a foundation and base. Now, I have this version tracking a document, by the way. If you're interested in it, it's on our website and you can check it out, or probably in the description down below. You'll be able to check it out. This is known as the Trading Strategy Evolution document. Now, grab that for free if you like. But really what's happening is that now we're going into this process is we're looking at actually how to improve these things. And then once you have something that's improved, we now have a little bit of a pillar, you could say. Now that pillar, you can think of it as a department in a grocery store. These pillars, what they allow us to do is give a little bit of a foundation to a group. And what we can have is we can have different groups within our trading account. And I like to call these buckets. Now, we did a class on this not too long ago. I called it the trading bucket strategy. And what we can do is place different trades into different buckets. Now, your bucket might seem, you can think of it like strategies. Then you can also think of it like different risk profiles. You can think of it different buckets in terms of days till expiration. So you're thinking of it in groups. And what you're doing here is to see and figure out which bucket is bringing you income, better in terms of a percentage, better in terms of risk. You can also think of it like a garden. I like to call it buckets, but you can think of it like a garden. I'll show you the garden concept. It's very similar. Okay. So here you've got, let's say, tomatoes and carrots and blueberries and apple trees, the growth behind it. So each different types of strategies, like you might have short duration trades that here, short duration trades right here, tomatoes in 60 to 85 days, those tomatoes are going to go in and grow, right? They grow pretty quickly, and you might be able to pull in some income from that. You've got carrots that grow maybe 70 to 80 days, again, pulling in some income. Blueberries, we've got some variations, and then an apple tree. So what you might have here is, instead of all of this garden stuff, you've got, these could be like a 0 to 14 DTE trades. You can also think of them more along the lines of, rather than those, you could say, hey, these are my vertical trades. Or it could be your covered calls trades. You could think of carrots as maybe iron condor trades. It's just a different type of trade, right? A different variation. You can think of this blueberries as calendar trades, and maybe an apple tree here would be covered calls. So the point is that we have variation, that if we place all our eggs in one basket, like let's say we just focus on tomatoes on our farm, well, if we have a bug that kills the crop, we're in trouble. So we're trying to spread our risk and capital into different zones and different parts of that garden into these groups. Here we've got, garden of stocks. You could say, hey, we've got Tesla, Microsoft, Starbucks, all these things. And you can also think of it like, hey, fast growth, medium growth, slow growth type trades. So here might be like, a Tesla, Nvidia, a Netflix. A medium growth could be like an Uber, a Meta, and Microsoft. Slow growth could be Starbucks, Walmart, McDonald's. So anyways, what you're trying to do is build kind of like a little bit of a different sources of income, just like you would have diversification, except when you're dealing with options, you're spreading that capital and risk. Anyways, if you want this worksheet too, just let me know. Shoot me a comment. Best thing, really, live chat, text message, SMS, book a 20-minute call. That's probably the best, because I don't always read the YouTube comments, Facebook comments, that kind of thing. So reach out. I'll send you some of these worksheets. But this is really what a lot of people do. They hop around from one stock, one ticker to the next, to the next, to the next. We want consistency. So this way we have a process and procedure. By having that consistency in that process and procedure, that's what allows you to get unstuck. It's that improvement cycle. That's actually what's going to evolve your business. It's the process that'll allow you to grow that strategy. And that's where you'll have consistency. That's where you'll get unstuck, because otherwise you're just going to be hopping around from one strategy to the next. That's what a lot of people do. Now, when we look at it in terms of buckets, now what you're able to do is you've got these different groups. Let me zoom in right here. We've got these different groups and cycles of these buckets. And they could be strategy, they could be short duration trades, long duration trades. So that could be one thing. The other thing could be, you could break it down into risk profiles. So it could be the risk of the tickers. So this could be high risk and lower risk. Okay. And what you'll have is you might have a certain return, like high risk might be, let's say 26% return, but the low risk might be 3% return. So you get some ideas in different zones, different areas. Short duration might be, let's say 14%, but they're short duration. You're able to repeat. Long duration, maybe it's 18% return on different trades on average, whatever. The case is that now whatever you've got, depending on the strategy, you can modify it. If you see something with, hey, this one's doing a -3, well, let me go to version 2 of that strategy, or version 3, and let me improve it so I have an improvement cycle. That's what evolves you. That's what makes you unstuck. And that's what can grow your trading account and business. So rather than looking at hopping, hey, let me do this one because I see it on a hot chart. Let me do that one. Let me do this one. You can stick to similar vehicles. You can stick to the same vehicle. But the point is that you're looking at improving the process. So if you're doing 30 days, 30 days, 30 days, you know your cycle. So I'm going 30 days, letting the 30 day get to, let's say 15, getting out. Then again, repeating 30 day, get to 15, getting out. Or it hits a certain profit target, then you are out as well. Or it hits a certain loss target, you are out. So you've got different procedures for different situations, and that's what you want to do. That's a lot better than just, hey, let me check out what hot stock's doing today, or what's the fastest moving. Yes, you could do that in some cases based on your process and based on your strategy, but it's not normally where you want to start with. So think of the improvement cycle, think of version 1, version 2, version 3, and that's what'll get you moving forward. Think in terms of groups, think in terms of, buckets. So looking at trading buckets, think of, hey, this group is higher risk, this group is shorter duration, that group is longer duration, that group is calendars, that group is delta neutral, that group is non-directional. Mix it up so you have different variety of income sources and risks to your trading. So anyways, hope that helps. If you're interested in some of the classes we do, check them out. Check out our website. Send me a text, please, and we'll get in touch and get with you. Anyways, enjoy the day ahead. Thanks for joining me, and I will see you on the next one. Take care.